Hello and welcome, everybody. This is the Hot Corner Insider Live Strategy Session. I am your host, Steve Straza, Chief YOLO Officer at All Star Charts. We do this every Wednesday at 1 o'clock Eastern Time. We're not going to spend too much time on the intro today. We'll talk a little bit, but, really, I know we missed last week, but not much changed. So we'll kind of get you up to speed on whatever developments are worth discussing from last week or the week that was missed, and then we'll hop into we have some great setups. Just went through them as a team. Some of my favorite stocks are just set up so perfectly at their prior cycle highs. The exact risk level that we want them at. So I'm going to spend a little extra time on some of our favorite setups today. So without further ado, nothing we discuss here today constitutes any solicitation to buy or sell any security. This is all solely for informational purposes, not to be construed as investment advice. For more on our disclaimer, you can visit stockmarkettv.com/terms. What's up, Frey Lee? What do you guys know about transports? Probably not much. Nobody really talks about these stocks anymore, right? We had a discussion at Portfolio Accelerator last week about whether or not these stocks even matter anymore, right? JC posed the question, and he actually was not being sarcastic. He said, does this concern you? Do transports matter? How much do we weigh this? And we kind of, hashed it out. And takeaway is that if we were to make a list, because it's a weighing exercise, right? We're weighing various data points, bucketing them in bullish, neutral, bearish buckets. And then we're looking at those lists. And the long list should win, right? The weight of the evidence is on the long list. If it's most data points are in that bullish category, we should be bullish. So right now, in terms of bearish data points, let's say transports are one. I think they certainly are selling off again here today. We talked about sector culprits with Ari Wald on the morning show today. He said it'll probably be small caps. I think it could be transports too, right? Probably not a big enough sector. But these could be the stocks that eventually we look back on once the market has peaked and rolled over, that we say, that was the signal. The transports warned us. But right now, everything else continues to look fine. That bearish bucket that we're putting transports in, very empty bucket. Until that changes, I don't think we want to be worried all that much about the price action. Good old Dow transports. Another one that would be in the bearish bucket. This is an exercise. We do this every week. If I was making a bearish argument, right? Fox Business News calls JC. Hey, we want you on. We want you to say bearish things. What's the bearish argument, right? We ask ourselves that as an analyst team. What would we say if we were trying to be bears today? What would be on that list? This would definitely be on that list. This, for me, more than the transports. So sure, we got weakness and a divergence. The Dow Transportation Average, right? Other indexes making new highs, trading near new highs. Dow Transport's trading at fresh year-to-date lows today, I believe. Oh, yeah. Ugly stuff. Consumer discretionary stocks. This is offense, right? This is risk on. This is the kind of stuff that should work, that should outperform in bull markets. They haven't been for some time now. In the lower area of this chart here in blue, we're looking at the consumer discretionary sector spider XLY in a ratio chart versus the S&P 500. And up top here, we're looking at that same relationship of large cap discretionary stocks, however, on an equal weight basis. So that's the black line. Looking at the equal weight large cap discretionary sector relative to the equal weight S&P 500. Both are making new 52-week lows. Neither look great. In fact, both look bad. But the blue line looks terrible. The blue line looks especially bad. XLY SPY hitting like its lowest level in like 12 years, sometime in 2012, I believe. You zoom out, we brought the chart on the morning show. I tweeted it out back in 2022. It's an overlay chart of XLY SPY and the S&P 500 itself. And whenever XLY SPY looks like this, making new, multi-year lows, in this case, decade-long lows, tends to foreshadow bear market, at least some sort of a sell-off. Will that be the case now? Is it starting now? Does it start a month or a quarter from now? Does this line go sideways for a while and then break down? And that's the signal? I don't know. But I would like to, as a bull, see this damage repaired as quickly as possible. So that's it. That's the most bearish story I could give you guys right now. 2 charts. At the end of the day, all of these, bearish intermarket relationships, in this case, risk appetite ratio, that's all well and good. But they need to be confirmed by price. These bearish data points are ever going to come to matter. It's happening in an environment where this chart is moving lower and to the right. That's not the case right now. S&P 500 pinged right up there at its all-time highs. Maybe we could worry a little bit if we break this tiny little, 2-week range here above the pivot highs from March and early April, right? If we're back in this box here below, 5250? Maybe you would call that tactical damage, I guess. Still a long way from the prior cycle highs. Structurally, this trend couldn't be more intact. Right? So any bearish data point, transports, underperformance from consumer discretionary. Okay. Is it being confirmed by price? No. Stocks are strong. Stocks are so strong. Breadth deteriorating a bit over the past few weeks. Right, since that new all-time high was made May 15th, right? We had that breakout, this candle here. Since some breadth deterioration in this little range here. The Dow is moving lower over the past 2 weeks, right? S&P's moving sideways. NASDAQ's kind of grinding slowly higher. Who will be right? We don't know yet. Probably the NASDAQ 100, because that's been the case so far this cycle. Markets are innocent until proven guilty. We'll continue to monitor these bearish data points and bucket them accordingly and weigh the evidence. But I continue to find so many long setups, so many bullish chart patterns that I think we really need to be getting involved in. And we want to be risk on, kind of moving further out on that risk spectrum, I think, into year end. Participation is broadening up until the past 2 weeks, like mentioned, right? We have seen a nice expansion, right? More and more areas working, more and more stocks overseas working. We talked about emerging markets. We talked about some of these short squeeze names. Talk about one in a second. There's a lot of opportunities out there. Let's talk about some of our favorites. Hey, Curtis. Hey, Steven. What's up, Ty? Wavy. I knew you guys wanted Chewy, right? Got to give the people what they want. So, congrats on the golf game. Ty, thanks so much, man. I'm getting out there again today. My first lesson, I started getting serious about golf probably this time last year. April, May of last year. And what I did was, it's been a process, just like anything. So I said, figure out driver first, right? So I used to get up there and I'm just spraying off the tee box. I'm losing, I'm losing 3 balls on each tee box. That's how I started. It was really bad. Right. So it took a while. We nailed down the driver, got the driver straight. Then we nailed down the irons. We got the irons straight. And we nailed down the short game. And then my last lesson that I took Sunday before the 78 round was actually putting, because I'm just like, I'm 3 putting way too often. But the way I always looked at it was, if I'm worried about my short game or my putts, and that's why I track my putts on the scorecard, everybody should, then I know I kind of made it in the other aspects of my game. So I kind of compartmentalized it, took one area at a time and just knocked them all off. So where I'm putting now, so it's been going good. Having a lot of fun out there. It's kind of like markets though, right? With golf, it's you're gonna be streaky, right? But you just kind of want to set yourself up or put yourself in a position to get lucky as often as possible, right? And do the right things, have your swing right, kind of have your mind right, and you're gonna hit some good shots every now and then. So yeah, the driver is the hardest. uh, Roman, so glad you're here live, brother. We have a good time here. All right, let's talk about this though. Chewy is squeezing to the moon. How about it? Almost 20% short interest will do that. This is how short squeezes work. If you were watching Chewy this morning, earnings were fine, but they company has problems. Company has problems. $500 million buyback, great. Everybody's happy about that. Top line's growing at 3%. Fine. It's fine. It's not good. It's fine. Gross margins 30%, net margins 2%. What are you guys doing over there? Right? So they like need a real CEO or somebody to like come figure out what the hell's going on with all these expense lines below the gross profit line. Hate that. 20% short interest, 3 days to cover. This stock was up 5% on a decent report coming into the day. Towards the open, 10%, 15%, you saw it creeping, right? Now it's going 30%. Once the momentum comes in to these names, that's when you want to be involved. Did we jump it? Did we get involved yesterday? Yes. Was the momentum divergence too good to ignore? The coil was there. Other heavily shorted names are working. If you look back at the last couple reports, you kind of could have figured that this one would probably beat. Do we do that all the time? Is it best practices? Probably not. Can you get a little more aggressive and take shots like that in a bull market? Betting on a downtrend, a stock in a downtrend to beat earnings? You could do it in a bull market. It's not best practice. It's not something we want to make a habit out of. Where do we get involved in Chewy now as it comes off of its best day in the history of the stock, right? So you zoom all the way out to the IPO, best 1 day performance here today, but look at where we're running into. This is the level. This is the new level now. Okay. A lot of dead bodies here at 22. Maybe let this thing breathe a little bit, digest today a little bit. Let's see what we're doing right now in this one. High and tight here on the intraday. Really nice. Not giving much back. So the bulls are in control of the short-term trend right now in a big way. Primary trend is still lower. I think above 22, this one gets interesting. We could be more involved there. I'll probably be more involved there. I think we can start to plan for a profit target using the anchored VWAP from the all-time highs. Comes in right now around like 37, 38 bucks. Let's let it figure out today's big move first. If you get follow through tomorrow above 22, I guess you get in there. But ideally, we get something high and tight here, right at this level. You see all these old lows, right? All these prior cycle lows. We get something high and tight. We just chop here a little bit and then launch. That's really how you want this one. So we'll continue to monitor it. But the worst stocks, right? The ones that were recently at all-time lows, like Chewy, even the worst stocks are ripping. What does that say about risk appetite? Right? Short sellers aren't getting paid. Tough to short in a bull market. Money Lion, ML. Uh, this is a big insider buy, a long time ago, but the chart's finally ready. Look at this. 82 is a big level here. You see the long-term moving average, the 200-day in gray there. Totally, turning back in late 23. Been sloped higher all year. Had a nice little coil here, right at these. This is the August 2022 high. We love the August 2022 highs. We love to use that as our breakout level for these bases. We have this little coil here. We're resolving higher in a big way. I like it more on weakness back towards these pivot highs, these year-to-date highs in the low 80s. So trading around 100 today. I like this one on weakness back towards 80, 82. First stop 134. I'm not even going to try to say this, but the stock ticker is LMAT. Sounds like a healthcare name. Any healthcare names that are doing well this week should stand out, and you want to put a little flag next to on your watch list because healthcare stocks are getting absolutely decimated. Large cap healthcare continues to be home to some of the worst stocks in the market. Look at Johnson & Johnson, look at UNH, look at any of these health plan providers, even the biotechs yesterday, absolutely collapsing lower. Continues to be a really tough space to invest in. I think it provides little to no read on risk appetite or the broader market, weakness from healthcare. I think if anything, you would argue that healthcare has a defensive tilt and that underperformance should be expected in a bull market. But boy, are you getting some nasty underperformance there. XLV SPY ratio also making new lows. Probably looks even worse than the XLY SPY. Anyway, Lemaitre Vascular. There, I tried. It was bad, huh? LMAT. First target hit. You got a nice multi-year base here. 80.50. We want to play it off that level now. Next stop, 106.50. That's the LMAT. These guys just cured bronchitis or something. No, I don't know. Go check out the press release. It's a word that looks like bronchitis. So I guess the first treatment for it, INSM, monster base. The stock was up over 100% yesterday. So let it cool off, maybe, but with momentum moves like this, you never really know. Awesome follow through today. We're up another 7%, engulfing yesterday's real body. So anything really north of 43.30, the base is in. Ideally, you want to catch it as close to 43 as possible. I think, limit orders around 45 make a lot of sense because that's the lower bounds of yesterday's gap, right? So yesterday's low of day, you can treat as a lower bounds of now this gap range that should be supported. And I think if you can get it around 45, that's great. And with a target at 76, great risk reward with a stop at 43. So that's INSMED, INSM. There will always be winners in healthcare because these names are also very different, right? There's going to be, great new drugs invented even in a bear market for healthcare stocks, right? And those stocks will get rewarded accordingly. So it is a naturally bifurcated sector. A lot of winners and losers. A lot of winners and losers. So here's one of the winners right now, INSM. We have a couple more biotech names at the end of the presentation. We'll get to them at the end. I want to do new names here up at the top. So this is CNX Resources Corporation, CNX. What a nice multi-year base. We're breaking out. This one is also heavily shorted. Sean likes this one. I think he just, I'm not sure what strategy he put on this one, but Sean just wrote about CNX. We're getting long calls. I think we're just long calls. Big buy last fall around the lows. 3.6 million. We're above 24 and a quarter, long all day. This one's leaving the station. Next stop, 30 and a quarter. Atlas Energy Solutions Inc. AESI coiling up here. Coiling up here at last year's highs. We're above 24.60. Really the pivot highs. 25. Target 30. That's just a trade, right? We've really zoomed in on this chart. 20%. Would be a nice trade. This one is for a shorter time frame than than these multi-year bases. Bearings BDC Inc. 4-4 buyer this time last year. Getting the breakout now. 95 is that level. I think you get confirmation at the pivot highs, which come in at so the 23 summer highs come in right around 99. And that was the intraday high, more or less, yesterday. About 99. You can start building a position above 95, but you really want to see it above 99 to confirm that breakout. We'll get to the stuff in the chat at the end. I see you guys. Steven, if you want to request ticker symbols, join us on Chart Request Live. We do that twice a week. You just come on there, drop us a ticker, we'll chart anything. I don't have my live charts up right now. So we try to do the live charting on this Chart Request Live show. Did you guys hear about NVIDIA's latest earnings report? No surprise there, right? Another beat. I mean, just look at this chart. It's just incredible. So this was the first monster earnings report beat where everybody was like, oh, wow. It's been a year now. This was May of last year. This is when people were like, okay, NVIDIA is now the gatekeeper for this new mega trend. Stock was trading around $300 back then. You could just see each earnings report. Boom, boom, boom. We just keep legging higher. This was another good one. Who knows how high this thing can go? Who knows how large the total addressable market is for their chips? Who knows how many chips Apple's going to come out and buy, or Microsoft, or one of the other major players, right? You just don't know. For now, it's NVIDIA and it's everything else in this market. So another target hit, 1,000. Again, guys, it's tough to not be in a stock that's moving like this. But do you want to enter here? I certainly wouldn't. You know, you want to enter on the consolidations. Like you would want to enter in this range here last year, play this move. Enter in this range here this year, you know, play this move. But momentum's overbought again. We're up for the last 4 days. This is great follow through on the earnings gap and go, right? We've had just tremendous follow through. It's probably a place where we more want to be feeding the ducks because we were already long, right? And we hit 2 targets after we got long this consolidation last year, but probably not entering new positions. So you've been in NVIDIA, good for you. Pat yourself on the back, pay yourself. There are other tech stocks that I want to own more than NVIDIA right now. Crazy thought. I know. Advanced micro devices. They're going to keep winning. They're like NVIDIA's little sister. Apparently they have like the lower quality and lesser expensive chips. It's the way I understand it. But go do your own due diligence. Bottom line for AMD is I love the shake and go we're getting here. We had a sweet breakout. I mean, this one was so good off the lows from last fall, right? It's just rocketed from like 90 last October to, I don't know, 220 something in Q1. You got something high and tight right here at the breakout level, boom, and then absolutely rejected. So AMD, I mean, not for the faint of heart. We say this a lot. But this one, when it moves, right? So from the March highs to the late April lows, we're off 35%. Quite the drawdown for a counter trend move. But look at us now. Back at the scene of the crime. Bulls back in control. If we recapture this VWAP from the all-time highs here, boy, do I love it. So I'm in. Maybe we'll get even more in. Maybe we'll add some kickers. Sean and I are flirting with the idea of a risk reversal right now. Haven't put it on yet. Might be on by tomorrow. 164 is that level. Above 164. I love AMD. 164. First stop, 233. I said first stop. Qualcomm, not here, right? Not right here today. So I don't, oops. Sorry, guys. Sorry, Gene. So I don't love it as much as AMD because it's not as actionable. But Qualcomm, I mean, the strength here during the month of May, look at this thing broke out, right, above these Q1 highs. It's just early, like May 1st. And just look at it, vertical. So off of the April low, all comes up like 35%. So we're not buying it here. A little bit of a little bit of a throwback to the 2022, 2020, late 2021 highs, which come in, right in the low 190s, 193-ish here all day. I think you can buy that weakness, treat this one like any other of those charts where we're playing against the prior cycle highs, right? My favorite of which we will talk about now. Okay, so what did we do today in Uber? We're already long the common. The stock has not been good most of this year. Came in hot, came in real hot. But Uber is, let's see, doing a lot of drawdown math today. 23% off of its highs from February now. It hasn't been working for a quarter. More. Buying this weakness all day. The primary trend is firmly higher. This was a market leader last year. It was one of our best positions. We just kept going back to the well on this one. And there's no reason why that should change here. If you look at the price action right here today, I see a sea of red. Every sector is red today. Nothing's really working. Uber is engulfing its last two candlesticks. So the action from last Friday and yesterday. Up almost 2% here. The anchored VWAP from the October lows last year. Remember when this was not a top and we trapped the bears and hooked higher? Trapped the bears, hooked higher. I don't think this is going to be a top either. That VWAP is going to come in and act as support. 64 is that level. I went out to July. I sold the 6250 puts. I used that money to buy 3 7250 calls. And it was a tiny net debit. And if you did it to finance 2 of the 7250 calls, you could have collected, I don't know, 50, 60 bucks. So that's called a risk reversal. I think that's exactly how you want to play Uber right here. Uber, long all day against 64. I'm also very long the common. This one continues to be one of my largest positions. It's been one of my largest positions since late 2022 now. We're above 64. Next stop, 91 in the Uber. Service now. Notice how these charts just look the same? This is where I'm at in my life, guys. I want the good ones. I want a clean and clear level. I want to know exactly where I'm out. And in the event that I'm wrong. And then I just want to let them work. Just let them work. You're buying really, really quality stuff. If you're getting along the names that we discuss in this report, not the Chewy, okay, but the rest of these, when we're talking about prior cycle highs, you're back there and back above your, bull market highs from 2021, 2022. You're not a laggard. You're probably a market leader, or at least in line. Sure, the index is, depending on which one, S&P is hard to beat these days. With these mega cap tech stocks, Mag 7 doing what they do. But if your chart looks like this, you're buying quality, you're buying leadership, buying relative strength, you're buying a primary uptrend. Life is easier when the primary trends are at our backs. With all things. Whatever. We're doing golf analogies today. You're on a par 5. Do you want the wind at your back or in your face? You want the wind at your back every time. I want the primary trend at my back, right? I want to be long something where I know that the bulls or buyers are in control. I also want to be long something where I know, boy, if we're below this level, that's right here, I don't like it anymore. Change my mind. I lose $1. If you can keep all of your losers so tight, you just get to take more swings. right? So the closer we are to our risk level, the more favorable that risk reward equation is, because our reward might be this and our risk is this if we're right at those prior cycle highs. Right? So we're juicing that R&R equation in our favor. And we're usually out with like no harm, no foul, no time wasted. That's why I like Uber so much right here. I mean, if this thing's going to break, it's going. Market's selling off today. Everything is lower today. Why isn't Uber breaking down? Shouldn't Uber be breaking down? It's the perfect day for Uber to finally break down below this level. Maybe it's a bull market, so it's not going to break down. Uber above 64, service now above 708. Got a little bit of weakness in the now. I think it's, yeah, yesterday you could have got it, below 720 even at the lows of the day. So service now here, the way this math works, say we're at 728 in the service now, the risk level at 708. So you're risking 20 bucks. And if you're long at 728 with a target of 938, your price target is like $210 higher, right? So risk 20 to make 210, 10x risk reward equation. That's what I'm here for. We want the juicy risk rewards. These are market leaders. Want to be long all day against the prior cycle highs. Pick your favorite one. I know one of our clients loves the ASML, was asking about that one. Same thing. Taiwan semi. If the chart looks like this, we like it. Service now, long with a target of 938. NRG Energy. Apparently, there are AI stocks even in the utility sector. I mean, who knew? Who knew, right? NRG just keeps hitting targets. It's so good. 7050 was the most recent one. Next stop, 108.70. I don't think you buy this right here, right now. Is this a weekly chart? Yeah, it is. Jeez. Back towards 7050. Back towards 7050, I like it. Right here, we're in the middle of our target or our objective and our prior objective. It's kind of no man's land. But again, a lot of stuff working. Maris, MRUS, we have some of the best biotechs in our hot corner universe. In an environment where not many biotechs are working, we just have like one after the next come onto this list that is working. So MRUS, one target's been hit, and now we're just surging higher off of that first target here. 48 is our new risk level. Next stop, 7150. Had a monster gap up late last week, and the lower bounds of that gap coming around 52.25 and coincide really well with the pivot high from March, which is right here. And I wish, we're zoomed out here to show the nice base, but if you zoom in, you'll see what I'm talking about. You have a level of interest now at 52.50, right, that you can use. Try and get a tighter entry. If we break 52.50, I think we'll probably want to monitor it, but I think you get it at 48 in that case. Vera Therapeutics probably won't be a top, huh? Heard that before. So Vera digging in. I actually got long this one yesterday. It is holding on here today. Again, if we are wrong, notice how all the charts that I'm talking about that I'm getting into look the same way. If we are wrong, I will lose like 50 cents and I'll be out of these prior cycle highs. For now, really digging in and holding. So we're making the bet that this top fails and we go on to hit our target of 56.60. And that soon, this one looks a lot more like Maris does, right? Because we've got the multi-year base. Now let's hit some price targets. That's Vera Therapeutics. LPL Financial. Our good friend, Mr. Ryan Dietrich, used to work there. 272. Those are your prior cycle highs. You got this sweet multi-month coil continuation pattern here. Might as well call it a pennant. Boom, blasting higher out of it. 272 is that level. As long as we're above there, I think you could be long. Getting a little bit of pullback today. We're trading around 280. So price target 330. Looks good. New holdings. People love this one. ex-US Bank, ticker symbol NU. Tommy Tuberville's involved, so it's probably juicy. If we're above 12, you got to be long new. We got a little multi-month consolidation situation going on here. Let this resolve higher. We want to enter this one on strength. I think you can even move that level up to about 12.25, right? Because we got a shelf of pivot highs here now from this price action from the past few months. So call it 12.25. Long on strength, target 1750. Amazon above 189. Got to be long. Hasn't gotten the breakout in the books yet. But boy, I think it's coming. 189 on strength for Amazon. target 255. Guys, I still love crypto. So I just want to mention these. We were crypto light today, and that's okay. It's okay. We talk a lot about Bitcoin and friends on this show. MicroStrategy continues to be a preferred vehicle. Again, kind of stuck in the range, but weakness back to 13, strength through 2050. Those are our current levels for micro. Coinbase looks as good as anything in this market. I just Coinbase, you drop this VWAP from the year-to-date highs, as long as we're above there, we're embarking on a new leg higher for Coinbase. And if you know anything about this stock, when it makes a new leg up, it really makes a new leg up, right? We're not talking about 10, 15, 20% here. When Coinbase goes, it goes. So next stop 278, but I really think at this point, if you're buying Coinbase, if you're entering here, you're using like the VWAP, which comes in around 232, or even the pivot lows, which come in around, just below 200 as a stop, you want all-time highs from this, right? You're like, okay, I'm entering Coinbase here, talk to me at 400. That's it. These are two great vehicles still to add exposure to Bitcoin, or in the case of Coinbase, crypto more generally. Oh my God, guys, we're so active in the chat today. How did I find the trainer? I found him at my golf club. Actually, a bunch of good guys work here. Shout out Key West Golf Club. Transmedics, organ transfer. I don't know anything about that. How long does your watch list get for Hot Corner? It's super long, dude. Super long. We trim them. We take them off when we think it's really just no longer relevant. Somebody made an insider buy early 2022. At this point, we might kick it out, or we might say, hey, that chart looks great. We're going to leave it in here. All right. So we make the rules. So really nothing hard and fast about that. The watch list is long. And that's why we do that, Curtis, right? So he said you pull one from 2 years ago. It's just now breaking out. These guys are typically buying weakness. CFO comes out, and he buys the stock down 40% drawdown when they just threw in the kitchen sink into their, recent earnings report, and the stock's off 20%. We're technicians. We're not buying that chart ever, right? The CFO can pick the bottom. That's one of the perks of his job, I guess, right? We're going to put it on our list, and then we'll buy it when the trend reverses. So we do have to wait a while, and that's intentional. We often get a question as to why do you leave them on for so long? We leave them on because we're waiting for the charts to look good a lot of times. Doesn't the list get too long? Yeah, it'll get too long. We do. We trim it up. There's something crappy on there, insider buy from years ago. We're taking it off. I think they'll probably chase tech stocks in the year end again this year. But let's see. No reason to be talking about year end yet. Let's try to make money today, tomorrow, this month, this quarter. Worry about year end later. Agreed, but request more. Yeah. Hey, we have a great team. Shout out analyst team. That helped with all this. I couldn't do all this by myself. We treated the analyst team. They had a great time in Sonoma. You should have seen them. We did a spa day. Some of us did a golf day. Louis was in paradise. He was having the time of his life. He was in heaven. I love this conversation, guys. Setting alerts. Yeah, you got to kind of find your way with alerts. They drive me crazy, but I have alerts set up all over the place. You can probably hear them go off on a lot of my shows. Thanks, Ty. You guys are the best. I missed you last week. Thanks for coming out and joining me. You guys make this show so awesome, so enjoyable every week. We will be back here, same time, same place next week. In the meantime, join us on the morning show every morning, 8:30, right here on Stock Market TV, and Chart Request live tomorrow at 1 o'clock. All right, everybody. Stay safe out there. Have a good one.
Bye.